Everybody, the June jobs report out right now. We are looking at jobs that were added to the economy in June. The number is 209,000. The unemployment rate, 3.6%. The 209,000 lower than expectations of 225,000. You can see the futures were pretty much flat, but in the red this morning. We've got a change in direction, a change in tone here. It seems to be the Nasdaq a little bit higher, and the S&P futures indicated to open higher as well. Joining me now to react, Tyler Goodspeed, Steve Moore, John Lonsky, Rebecca Walser, Joe Concha. All of these folks are here with us, as well as the Job Creators Network president and CEO and author of The Real Race Revolutionaries, Alfredo Ortiz. Steve Moore, I want to start with you. Your reaction here. This was not a blowout, 209,000.
No, I'm a little surprised that it's as low as it is. So I haven't seen the underlying numbers yet. I'm just going to look it up as soon as those numbers get posted. But yeah, I thought we'd see well over 300,000. But I have to say, I hate this idea that because the jobs report underperformed, that somehow that's good for the markets. I mean, come on. I mean, I just hate that idea. When Americans are working, that's good for the economy. It's good for the stock market. But I know that the conventional wisdom is that this means that, wages won't rise as fast as some of the people on Wall Street had feared. But, look, I want to see where those jobs are, though. I want to see, are they in manufacturing, are they construction, or as Tyler was saying, are they in the lower end of the service sector jobs? So can't wait to see those numbers. We should get those any minute now.
We'll get more on that. We'll get more on participation. We'll get more on wages as well. So we'll start to break it down. But Tyler, I want to come back to you on your initial reaction to this, because as Steve points out, the reason I noted the change in direction in the markets is because yesterday markets dropped thinking that the ADP report was so strong, the Fed is going to have to hike in July. Now, maybe with a softer report for June jobs report, would the markets expect that the Fed might say, OK, we'll continue to pause?
So I'm hitting refresh on my phone to try and get the details of the numbers. But on the face of it, I don't think that this will meaningfully impact the probability of another July hike. Maybe it could shave a little bit off the probability of a further hike down the line. But this is still a pretty big number, and as Isaac Newton told us, an object in motion tends to stay in motion unless acted upon by an external force. We've had an external force act upon the U.S. economy over the past year and a half in the form of Fed tightening, but evidently that the application of that force has not been of sufficient strength to really meaningfully slow what is still a very tight labor market.
Rebecca, let me come to you because I have a little bit more detail here. We're looking at labor force participation, 62.6%. Still on the low side, as Steve pointed out before the number came out. And we've got average hourly earnings. They're up 4.4% from a year earlier.
Right. Yeah, I mean, Jackie, this number is actually really surprising, especially with the ADP number coming out yesterday so close to this number. Usually, obviously, comes out Tuesday, Wednesday, and then we get the actual, Department of Labor numbers today. But yesterday it really spooked the markets, and I thought locked in for sure a July hike. So this is a definite surprise miss for me. I'm quite surprised, actually. And when I looked at the ADP numbers, what stood out to me yesterday, Jackie, is while Biden's touting his manufacturing in South Carolina, we had lost 42,000 manufacturing jobs in the ADP numbers yesterday, and 199,000 of those almost 500,000 jobs were created by employers that have under 50 employees. So the small and medium-sized businesses, the under 500-sized businesses, they really created the bulk of the jobs in the country. So we know that even though we're shrinking and we're under 10 million openings now from the JOLTS numbers, we know that people are not participating. There's some 100 million working age Americans that are not actually working. And there's lots of reasons for that, but that is really low, Jackie, and we've got to see people going back to work. But Powell doesn't want that right now. Right now, he doesn't want unemployment being a problem, but he doesn't want the overheating of the small and medium-sized businesses that keep these openings going.
John Lonsky, what do you make of that 4.4% increase in average hourly earnings? That's year over year.
Well, those who worry about inflation are not going to like that faster rate of growth for the average wage. And, Steve is right that we shouldn't be overly concerned with wage growth in and of itself. However, when you put faster wage growth in the context of declining productivity, it is of concern. So basically, declining productivity says we're getting less work, but are paying more money for that hour of work.
Yeah.
Unit labor costs are rising, and that's putting upward pressure on costs and ultimately on prices. Not the best of news. One of the reasons why we have a problem with productivity is that jobs growth has been skewed towards these less productive, low productivity growth service sector occupations in leisure and hospitality, for example.
Alfredo.
Hey, Jackie, can I add something really quickly? Because I just looked at these numbers. There was a downward revision in the last 2 months, and if I'm reading this correctly, of almost 100,000 jobs. So this is a weaker report than we had all hoped for. I mean, if you subtract out the downward revisions, we're talking about only about 110,000 added jobs, given those downward revisions. So that's a pretty big downward number.
Joe Concha's mad at me because that was the point he was going to make. So jump off of that.
I was mad at Steve. I'm like, boy, it's telepathic. It's amazing. Yeah, Steve, to your point, April and May had downward revisions of 110,000 jobs. Yeah. So you see that 209,000 now, Jackie. We have a feeling, based on what we've seen, not just in April and May, but many months before that, this number is probably going to be even lower than what we're looking at right now. And obviously, this one didn't meet the expectations of, much higher in the 200,000s than what we're seeing.
I want to bring in Alfredo, too, because this headline unemployment rate, 3.6%. Average person is going to read in USA Today, that's the headline, and think that the labor market is strong, and it has been. But that doesn't speak to the larger economic picture in this country right now. Sticky inflation, people still struggling. They're paying more for things longer. Their savings have dwindled. Their credit card bills are piling up. There's so much to think about here.
Yeah, absolutely, Jackie. I'm actually not surprised with the number because, when we overall look at the jobs report, we also look at the JOLTS report, which is short for the Job Openings and Labor Turnover Summary, comes out of the Bureau of Labor Statistics. When you actually peel the onion on that, you actually see that the quit rate is actually slowing down overall. So how employees feel about moving from job to job is pretty much where it was in pre-pandemic levels. And so people are feeling less secure about the jobs. And then overall, also, our small business owners are not feeling that great about the economy. They've been hit with inflation. They've been hit with, overall labor shortages. And right now, they basically have put a pause on hiring. And in fact, 2/3 of our small business owners are not feeling great about the economy in the next 3 months. They don't want to hire and they don't want to increase wages.
Yeah, and that's a really important point, which leads me to mind. The control room can help me out and put that full screen up of where the jobs are. So some of these stats that Steve is talking about. Government was well up there. Healthcare
60%.
was up there as well. Construction jobs were added. Let's see, what else do we have here? Professional and business services, leisure and hospitality, which we've continued to see time over time since the pandemic. Transportation and warehousing down. Retail trade down. Let's get a reaction on that from Rebecca.
Yeah, all bad, I think. I'm surprised housing, because I thought housing was actually showing to the downside, Jackie. But, obviously I can't see your screen, but looking at the ADP numbers, what I saw was, like I mentioned earlier, we lost 42,000 manufacturing jobs, and 232,000 of the total 497,000 ADP was leisure and travel. And those are, could be seasonally adjusted for summertime. So I do agree that these are the lower paying jobs. We're losing jobs in the sectors that show that the economy is expanding, growing, and is healthy, and we're starting to add at the bottom sectors. And all of these factors together, overall, Jackie, just aligns up with everything that's going on globally. So I'm seeing this as an overall really not a great report at all. And I think that the market will probably, the equity markets today will probably take this as a positive and probably whipsaw to the upside if they're still going to be, if we're pretty still negative, because of the fact that, maybe the 25%, even though you're saying that the probability went up, which does not make sense to me at all, because I think this reflects that Powell might have a reason to pause.
Yeah, and it's this inverse relationship. Bad news is good news for the market. Good news is bad news for the market. Hard to know exactly what they were thinking. Somebody is trying to jump in there. Who is it?
Yeah, Jackie, this is Alfredo. Just to add on to that, what's interesting is, again, if we look at the JOLTS report versus a year ago, those same industries we were talking about, professional and business services, that quit rate went down, 25%. In leisure and hospitality and accommodation food services, that quit rate went down 15%. And so on the surface, like I said, there might be more openings, but people are actually feeling less secure in those jobs.
Let me ask you about this, because there was a stat that showed how much we're spending as a nation on food stamps and programs that subsidize food. It was something like 55 billion before, and it went up to 110 after the pandemic. It literally doubled. And I think about people going back to work, and I think about some of these programs. They're not direct stimulus checks, but they're still supporting people from not getting a job. So, Steve, to your point that, people are considering going back to work, I think some people are, not all people are, because there's still a government safety net that's out there to support them, John Lonsky. This is a problem with this Bidenomics, and this is something that they don't talk about when they go around the country and they're touting all their accomplishments.
Yeah, if you have government programs that discourage the work effort, you got fewer people applying for jobs, and those that are working are able to perhaps enjoy higher wages. But it's a sad thing when government policies try to discourage people from appreciating the dignity of work. I'd like to get quickly return to something that Steve mentioned, very important, and that is that big jump in government jobs, up 60,000 a month of June. I might add there was a big drop in the creation of private sector jobs from 259,000 in May to 149,000 in the month of June. That's not good. If we go back to the inflationary 1970s, what we're going to find is there was continually a very fast rate of government jobs creation. When we look at 1985 to 2019, we find there's a very slow rate of government jobs creation. The problem is this. I remember the 70s. If somebody didn't like their private sector job in manufacturing or whatever, they would go ahead, quit the job, go to the state government, get a higher paying job with better benefits, and of course, this had the effect of putting upward pressure on wages in the private sector that exceeded productivity growth and, as a result, added to price inflation. This is not a good sign when you have the U.S. government becoming one of the more dynamic sources of employment growth in the U.S. economy. U.S. state and local government.
John, it's even worse than you're saying. You're exactly right, but it's even worse because, Biden's running around saying, oh, look at all these manufacturing and construction jobs we're creating. Well, those are all a result of these government programs. Right. Jackie, those are government building pyramids. Those aren't productive jobs for the economy. So we're becoming too dependent on government to keep up this pace of job growth.
That's a great point. Joe, jump in.
Jackie, you shared a number before. Maybe do a double take and look it up. And these are the exact numbers when it comes to food stamp spending. Yeah. 2019, $63 billion spent. You say, boy, that's pretty high. Fast forward to 2023, we've gone from $63 billion to $127 billion.
Double.
That is double.
Double.
Yes, in the span of 4 years. And the question is why?
Why? Steve?
Great point. Why is it that in an economy that has a surplus of jobs, are we paying people not to work? It is the dumbest thing I've ever heard, and those numbers show you just recited. I mean, we should be seeing record low levels of these government assistance programs, but they continue to rise.
What about the fact that with the debt ceiling negotiation, Republicans, put a work requirement in? So you have to show that you're looking for work, you're trying to work to obtain these benefits. The Democrats fought hard against that. They didn't want it. They wanted anybody who wanted access to have it. Steve.
Well, we did make some strides, but I'm not sure there are work requirements for food stamps, by the way. I got to double check that. But, there are something like 40 different welfare programs. Every one of them should have a work requirement. And by the way, they're only requiring 20 hours of work. How many Americans in private sector jobs are only working 20 hours?
Right. That's a good point, too. Only about a minute left. Tyler, final thoughts?
Well, I would just say, if we're adding jobs in these low productivity sectors, then that creates a bit of a challenge for the Federal Reserve, because if we have wage inflation running at about 4.5%, and that's been moving pretty sideways over the past 6 to 9 months, ordinarily that would be consistent with an underlying inflation rate of about 3.5%. But if we're adding these jobs in low productivity sectors, then that would actually imply a higher underlying inflation rate.
You guys, I want to thank you all for being here this morning. Tyler Goodspeed, Steve Moore, John Lonsky, Rebecca Walser, Joe Concha, Alfreda Ortiz. And Joe Concha, thanks for being my wingman. Also, have to remind everybody, shameless self-promotion plug, don't miss the Big Money Show today at 1 p.m. Eastern Time. I will be there.